Nokia stock is currently trading at $14.71 during this May 14, 2026 session, marking a significant intraday climb of 11.69% as the market reacts to a sudden shift in how institutional players view the telecommunications landscape. This move follows an aggressive after-hours rally that saw the price touch $15.28, signaling that the momentum we are seeing in the individual brokerage accounts and across the major investing sites is not just a retail phenomenon. While the general expectation among many participants using the Robinhood app or the Fidelity mobile app was that Nokia would remain a slow-moving, dividend-focused utility play, the reality is that Nokia stock has transformed into a high-octane bet on AI-driven infrastructure. This massive disconnect between the old perception of a hardware company and the new reality of a software-centric AI leader has created a massive curiosity loop that is forcing a total rethink of the ticker. The sentiment across the Interactive Brokers trading platform has flipped from cautious to overwhelmingly bullish as investors realize that Nokia stock is no longer just waiting for 5G to mature. Instead, it is capturing the massive wave of enterprise AI demand that was previously reserved for names like Nvidia stock. Institutional activity from giants like FMR LLC and BlackRock shows a distinct accumulation pattern, with trading volumes spiking well above the 30-day average. The expectation was that traditional telco spending would be flat, but the reality revealed in recent data is a 49% growth in AI and cloud orders. This is the kind of insight that investors looking for investment help on the Schwab Intelligent Portfolios platform or checking their Fidelity Wealth Management accounts often miss until the price has already moved. Nokia is currently outperforming the broader technology equipment sector by a wide margin, proving that its pivot towards autonomous AI agents for network operations is resonating with the big capital. If you are currently trading on the Robinhood app or using a SoFi trading platform, you've likely noticed the stair-step movement in Nokia stock over the last few weeks. It moved from the low $10 range to $14.71 with clinical precision, supported by multiple analyst upgrades from firms like JP Morgan and Argus. These firms more than doubled their price targets, moving the goalposts from $6.90 to as high as $15. This is a classic case of the market narrative lagging behind the operational reality. For years, the story was that Nokia was a laggard compared to the high-growth darlings like Apple stock or Tesla stock, but the current volume suggests a rotation into overlooked infrastructure plays that provide the backbone for the digital economy. While many were busy self-investing in volatile meme plays, Nokia was quietly securing 5G contracts and defense partnerships with companies like Lockheed Martin, providing a stability that few expected from a legacy tech name. When you look at the intraday movement today, the buying pressure is relentless. The stock opened at $13.81 and immediately pushed through previous resistance levels, ignoring the general market volatility. For those using the Fidelity trading platform or Interactive Brokers platform, the technical setup is almost textbook. We are seeing a breakout from a multi-year consolidation phase, often referred to as a rounding bottom, which suggests that the long-term trend has definitively shifted upward. The reality of the situation is that Nokia is no longer just selling boxes and cables, it is selling the intelligence that runs the networks. This change in the business model is why we are seeing such aggressive interest in SoFi stocks and why the intelligent portfolio algorithms are likely increasing their weightings in the telecommunications sector. Comment below how many shares of Nokia stock you currently hold and whether you think the AI infrastructure boom is enough to sustain this rally through the end of the year. Your engagement helps us gauge the retail sentiment across different investing sites and see if the general public is as bullish as the institutions. It is interesting to see the contrast between the individual brokerage users who are just now finding the stock and the long-term holders who have been waiting years for this specific catalyst. Looking at the broader context of online investing today, it is clear that the barrier between hardware and software is disappearing. Nokia's recent sale of its fixed wireless access unit to Inseego and its expansion into defense AI partnerships shows a management team that is lean and focused. They are trimming the fat and doubling down on high-margin segments. This is a strategy that resonates with those using Fidelity IRAs and other long-term investment vehicles. The expectation was that Nokia would stay a hold forever, but the reality of their €1 billion in new orders for AI and cloud services has made it a strong buy for many analysts. This is the tension that drives price movement, the slow realization that the old story is dead and a much more profitable one has taken its place. Nokia's business model today is built on four main pillars: network infrastructure, mobile networks, cloud and network services, and Nokia technologies. While the mobile network segment was once the only thing people talked about, the cloud and network services division is now the star of the show. By integrating autonomous AI agents into their platforms, Nokia is helping operators reduce costs and improve performance without human intervention. This is the kind of technology that keeps a company relevant in a world dominated by software. Investors who use the Robinhood stock trading features or those looking for the best Fidelity ETFs are starting to see that Nokia offers a unique way to play the AI theme without the extreme valuation of some Silicon Valley firms. The PE ratio is still significantly lower than many of its peers, providing a margin of safety that is attractive to conservative investors using Schwab Intelligent portfolios. Past performance used to be a weight around Nokia's neck, with memories of the mobile phone collapse still lingering in the minds of some older traders. However, the current reality is a company that has raised its dividend for 4 consecutive years and maintains a balance sheet with more cash than debt. This financial health is a far cry from the struggling Nokia of the past decade. For those engaging in online investment through Fidelity Brokerage or SoFi Investing, these fundamentals are the bedrock of a solid long-term position. The market is finally rewarding Nokia for its discipline, and the current price of $14.71 is a reflection of that newfound respect. It is a reminder that in the world of investing, patience often pays off when the underlying business is undergoing a genuine transformation. As we look toward the future, the catalysts for Nokia stock are clearly defined. The upcoming rollout of 6G standards and the continued expansion of private wireless networks for industrial use cases provide a clear runway for growth. The expectation was that 5G was the peak, but the reality is that the demand for data and connectivity is only increasing. Whether it is through Robinhood Investments or Fidelity Mutual Funds, the smart money is positioning for a decade of infrastructure upgrades. Risks certainly exist, such as geopolitical tensions affecting global supply chains or a slowdown in enterprise IT spending, but Nokia's diversified geographic presence helps mitigate some of these concerns. They have successfully navigated the challenges in the APAC region and are winning market share where competitors are being phased out. Scenario planning is essential for any serious investor using an Interactive Brokers account or a SoFi robo-advisor. In a bullish scenario, Nokia continues to beat earnings expectations and raises its CAGR guidance for the AI segment, potentially pushing the stock toward the $20 mark. In a more bearish scenario, a global recession could delay network upgrades, causing the stock to retreat toward its support levels near $12. However, the expectation of a permanent slump seems increasingly unlikely given the current strength of their order book. The reality is that the world needs what Nokia is building, and the lack of viable alternatives in the Western market gives them a significant competitive advantage. To wrap this up, the story of Nokia stock today is one of a legacy giant that has successfully reinvented itself for a new technological landscape. We started the day at $14.71 with an 11.69% jump, a move that perfectly illustrates the tension between the outdated market narrative and the current operational success of the company. While expectations were low for years, the reality of Nokia's dominance in AI-driven networking has forced a massive upward revaluation. Whether you are using Robinhood fractional shares to build a position or managing a large portfolio through Fidelity Wealth Management, the takeaway is the same. The fundamentals have caught up with the stock price. The contrast between what people thought Nokia was and what it has actually become is the driving force behind this rally. As institutional activity continues to heat up and the technical breakout holds, Nokia is proving that authority in the tech space is earned through consistent innovation and strategic pivots. The era of seeing this as a boring stock is over, and the market is finally paying attention to the intelligence inside the network. Stay focused on the data, ignore the noise of the old headlines, and keep a close eye on the volume as we head into the next few trading sessions. Nokia has set a new bar for itself, and the market is clearly ready to follow. This isn't just a daily swing, it's a fundamental shift in the company's identity and its place in your portfolio. Authority comes from results, and right now the results are speaking louder than any analyst's report ever could. Keep your strategy sharp, stay informed, and always look for the reality hidden beneath the expectations.